Okay, so this is August 22nd of the trading log. What I'm doing here is trading a really small account with a new algorithm and keeping track of those results, primarily focusing on the false break trade. I'm trading the false break model. What I'm looking for is a kind of key market level that has a creating candle, at least two confirming candles, and is, if it's a resistance, it's getting rejections. And if it's a support, then it's rejecting, to the upside. So here's an example of kind of simple false break. It just has a wick that's piercing through. A two candle one is very, very popular. Nice twin towers here. And then a complex false break is multiple candles above. So the fastest, of course, is going to be a simple one. That's the easiest one to trade, and complex is harder. I'm trading only the daily and 4 hour and 1 hour, and not using lower levels. And the first step is to mark the daily 4 hour and 1 hour levels. So here we see how the fuck is this so wide? I'm not sure how to make this less wide, but this is the daily chart. We were in this channel for a long time and then had this significant break on, what day was that? That was on Friday. So this is a nice true break through this candle, but I didn't have any trades ready for that. And since then, there's no significant level creation here. We had four candles that are pretty erratic, which is expected after a large drop like that. So if we go into the 4 hour, we see something much more interesting, which is there was this level here that if you're trading the false break level, you would have got stopped down here. But here's another one. So you can see it's creating, confirming, false break, confirming. The crucial piece of the false break is that you're setting a conditional order after that price level has been passed. So imagine this candle, we go up and make it up to 21,600 or something like that. If our level's down here, we want to enter a short about at this level. And it'll be a short, stop market order or conditional order, however you want to say that. But essentially, we're going to enter short with a market sell when it returns back down. And that way, you're not looking at sort of unbounded losses or having to kind of guess if you're having a limit order up here. Instead, you're going to restrict your entry to the stop to the top of the wick. So in this case, if we did a conditional market order with this wick as our stop, we made a 3-to-1 risk ratio. We actually probably wouldn't have been profitable on this trade either, because let's see, entry would have been, we'll say about here at 21,520. The high, which the high is shown up here. The high is 21,800, we'll say. So 800 minus 520 times 3 is 840. All right, we're going for 3-to-1 risk ratio. And so we'd be looking for 21,520 minus 840. Profit 26.8, which would have been down here. So that trade would have been profitable either if we did a false break here. However, that was quite a long candle. And you could kind of infer that maybe the technical stop there wasn't the right call because all the wicks are much shorter. Anyway, what we're going to look for here is we're going to set an alarm to go off when we reach this level again. And once that level is created, then we'll create a conditional market order short just below it. SpyBit does not have support for that functionality yet, and so we're going to set the alarm on. Actually, I bet I could set an alarm here. Does SpyBit have alarms? I'll find that out on my own time. Right now, I'm going to set my price alert. So give me a see. This creating candle, I'd say this is confirming as well. It's pretty close to the price. Confirming. So this is a strong level, and I'm going to set an alarm here. So when that alarm's ticked, then I'll enter my conditional market short. When that lands, then I'll stream again.